They say a cashless society is about convenience, that digital money is simply the future. But what if the cash in your wallet is being deliberately phased out and the upgrade they're planning is actually a trap? This is the story of how your financial freedom could vanish almost overnight. The quiet war on cash has already begun, and what's coming next could fundamentally change everything you think you know about money, privacy, and control. The quiet end of cash. Take a look in your wallet. How much actual cash is in there? For more and more of us, the answer is not much. We've been nudged into thinking that tapping a card or a phone is just better. It's faster, cleaner, more convenient. Governments and central banks are more than happy to see this trend continue. They tell us it's about efficiency, lowering costs, and fighting crime. But this isn't some happy accident of technology. It's a deliberate shift. The decline of cash isn't just a side effect of innovation, it's the required first step toward a totally new kind of financial world. One where every transaction is digital, tracked, and stored on a central ledger. For centuries, cash has meant freedom. It's anonymous, it's direct, and it doesn't need a middleman's permission to work. Its value is held by whoever has it. When you buy a coffee with a $5 bill, that's a private moment between you and the shop owner. No bank, no corporation, and no government is involved. That simple everyday privacy is exactly what's at stake. As we use cash less, the system that supports it, ATMs, armored trucks, bank tellers, gets more expensive. This creates a death spiral. Cash becomes harder to use, so people use it less, which justifies getting rid of it even more. We are being quietly but deliberately steered into a world where physical money is no longer an option. But what are they steering us toward? This is where the story takes a much darker turn. What exactly is a CBDC, the upgrade? So what is this big upgrade they have in mind? You've probably started hearing the term Central Bank Digital Currency, or CBDC. Now, the balance you see in your banking app is already digital money. But here's what you need to understand. That's commercial bank money. It's a claim on a private company, your bank. Your bank, in turn, has its own account with the central bank. A CBDC is a whole different animal. It would be a direct liability of the central bank itself. Think of it as a digital dollar or a digital euro issued directly from the government's monetary authority. Instead of an account with your local bank, you'd have one directly with the Federal Reserve or the European Central Bank. And this isn't some far-off sci-fi concept. It's happening right now with breathtaking speed. According to the Atlantic Council, 134 countries, representing 98% of the entire global economy, are now exploring a CBDC. The world's biggest economies are leading the charge, with nations like China, India, and those in the Eurozone already deep into pilot programs. The sales pitch is that CBDCs will make payments faster, cheaper, and available to more people. They claim it will modernize the economy and help nations stay competitive. But to see the real picture, you have to look past the marketing slogans and at the technology itself. Because the single most important feature of a CBDC isn't speed or convenience, it's programmability. And that's the feature that turns this whole thing into a trap. The convenience mask. Why they say we need this. Before we spring the trap, you have to hear their sales pitch. Why are governments so excited to roll out this new money? The public arguments always focus on the benefits to you. First, they talk about financial inclusion. For example, the Bahamas launched their Sand-Dollar CBDC to help residents on remote islands get access to financial services. The idea is that anyone with a basic phone could finally have a bank account. Next up is efficiency. Proponents say CBDCs could dramatically cut the time and cost of sending money, especially across borders. International payments can be slow and expensive. A CBDC could theoretically settle in seconds for almost nothing. And of course, there's the argument about fighting crime. Since every CBDC transaction is traceable, governments claim it's a silver bullet against money laundering, terror financing, and tax evasion. The anonymity of cash, they say, is a bug, not a feature. They paint a picture of a perfect system, instant, global, and secure. It sounds like progress. It sounds wonderful. But these benefits, whether they're real or just exaggerated, are a mask. They hide the profound danger to our personal liberty. They are the spoonful of sugar to help the medicine go down. But this medicine isn't meant to cure us. It's meant to create an entirely new system of control. The trap unveiled. The end of privacy. All right, Let's talk about the real dangers. The first and most obvious part of the trap is the complete destruction of financial privacy. Cash has no memory. A CBDC has a perfect permanent one. When the European Central Bank asked the public for their opinion on a digital euro, privacy was the #1 concern raised by a massive 41% of respondents. People instinctively know what's at stake. Fed Chair Jerome Powell has been surprisingly open about what this means. He confirmed that a US CBDC would need to be identity verified and therefore not be anonymous. He talked about balancing privacy, but a centralized government ledger recording every transaction is a surveillance tool unlike anything in history. Think about what that really means. Every coffee you buy, every political party you donate to, every book you purchase, every trip you take, it would all be logged on a government server in real time. They would know your habits, your friends, and your beliefs, all based on your spending. In a 2022 interview, Powell tried to downplay this, saying, "We would not want a world in which the government sees in real time every money transfer that anyone makes." Yet the very design of a CBDC makes that outcome almost unavoidable. This data could be used for social credit scores or to control behavior. It creates a permanent record of your life that could be hacked, leaked, or used against you in ways we can't even imagine yet. With cash, you have freedom. With a CBDC, every purchase is a request for permission, and it's etched into a permanent government record. This isn't just an upgrade, it's a radical change in the relationship between you and the state. It's the end of financial privacy. Soft CTA. If you believe financial privacy is worth protecting, take a moment to subscribe. The bigger we make this conversation, the harder it is for them to ignore it. This is a conversation we need to be having right now. The trap unveiled. The control matrix. If losing your privacy is the bait, then programmability is the steel jaw of the trap. This is the feature that turns money from a simple tool you use into an active tool they use to control you. So what is programmable money? It's digital currency that can be coded with rules. Rules that say how, when, where, and on what you're allowed to spend your own money. This isn't a secret. The head of the Bank for International Settlements, the central bank for all central banks, Agustín Carstens, laid it out with chilling honesty back in 2020. Talking about the difference between cash and CBDCs, he said, "In cash, we don't know, for example, who's using a $100 bill today. A key difference with the CBDC is that the central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also, we will have the technology to enforce that. Absolute control." Let that sink in. What could this look like? First, negative interest rates. To stimulate the economy, they could program your money to literally expire, forcing you to spend it before it vanishes from your account. Saving would become impossible by design. Second, spending controls. Imagine stimulus money that can only be spent on approved items like food, but not fuel. Or imagine a future where they decide certain things are bad for you or the planet. They could simply block you from buying too much gasoline or from shopping at a business that isn't on their approved list. India is already exploring programmability for government subsidies. There is another reason for all that cause. This is also kind of connected to matrix concept, because the much people will start to use digital things, the much people starts to rely on digital things, that much the access government can get to access their personal details. In short, they just want to control you in every single way. They are just looking forward to build a system that no one can escape. Conclusion and strong CTA. We are at a historic crossroads. The march towards a cashless society and the introduction of CBDCs are being sold as the next step in our financial evolution, a future of ultimate convenience. But that convenience is the bait. The trap is programmable money and the absolute control it brings. It's a world where your money isn't yours anymore. It's a permission slip, owned and operated by the state, that can be revoked at any time. This war on cash is a war on our right to privacy and our ability to own property. A line is being drawn between convenience and control, between liberty and surveillance. The only question is, which side are we on? Share this with one person who needs to understand what is truly at stake. The more of us who see the trap, the harder it will be for them to spring it.